Okay, hey everyone, I wanted to make this quick video I'm excited to share this calculator with you that I built. It's a spreadsheet, it's a mortgage calculator that does a couple things, and hopefully this can help anyone who is looking at possibly refinancing because the rates are so low right now. I originally built this for a different purpose, but I've kind of restructured it to help compare and contrast different rates. So I've been getting questions about what would my payments look like and things like that if I lowered my interest rate by a point, something like that. So here we go. Let's say we've got a loan amount. Let's say your original loan was $250. Let's say your current balance is $240. Doesn't matter what that is. And let's say your current interest rate is 4%. You can change all of this. This is just a hypothetical scenario. So this will automatically tell you, this will calculate where your monthly payments are. And this is principal and interest only. This is not taxes and insurance, anything escrow, anything like that. So this is just between you and the bank. That's what this number is. So if it looks a little bit lower than what your actual monthly payments are, that's why. So that's there. We don't need to worry about this for right now. This is for the one of the reasons I originally built the calculator. But here we go. This is what we want for anyone who's looking at low interest rates and refinancing. So we're going to go ahead back to this first tab. We're going to punch in our info on our mortgage here. We're going to go to the Refi tab, which is the new one that I've just built for you guys for this time period. And it's just going to automatically populate it. It's going to grab this from the previous page. Monthly payment here. This will tell us, we've got all these spreadsheets here, which we won't get into in this video, but this will tell us how much interest we're paying over the life of the loan. So a loan of $250,000 at 4% amortized over 30 years, you will pay $179,000 over the course of 30 years back on this money that you borrowed. So the total amount that you will repay is what you borrowed plus this interest. And we won't get into this in this video, but this, I like to think of this as we are buying a product. That product is a mortgage, and we are paying this for that product. So the less we can pay for this product, the better. So this will also go through and it'll grab in the amortization schedule. It'll find what your current balance is and tell you how much time you have left on the mortgage. So here's what we want to do. Let's say this is your scenario and you say, okay, interest rates are really low right now. So loan amount, if I refinance, let's say your current balance is $240, but we'll roll in a couple $1,000. Let's just round up and say $245 in case you have any fees that you're gonna roll into the loan. Is that right? Yep, $245,000. And we can just leave this at 3%. So this is just a point lower. So if you're looking at refinancing, you're currently, let's say 4%, and you have the option to go down to 3%. So what does that look like for us? Just in doing that, still once again, 30 years, most of this is set up to accommodate a 30-year loan. It'll tell you your monthly payment is $1,032. So instead of the $1,193, we're down to $1,032. It'll tell you our monthly difference there is $160. And here, if we want to compare this block to this block, our interest on $245. So we've got two factors that are helping us here. One is this is a slightly lower amount than what we had originally borrowed. And also the interest rate, that's the bigger factor here. But we do have two things going for us here to lower the monthly payment and all of these numbers as well. So back down to this block, our interest on $245,000 at 3% over 30 years is $126,000. So it's obviously way less than $179,000. And then the total repaid is going to be lower because both the interest and the principal amount are lower. So $371. And if we refinance and we reset our clock, we would be paying for 30 years. Now here, this next part, this is kind of the magic sauce that I wanted to share with you guys, is what some people like to do is say, okay, well my budget, I'm used to paying, let's just say your payments are, including everything, and even just $1,500 a month. If you, and once again, this is principal and interest only, so including everything else, let's just say it's $1,500. If you can lower that by refinancing by $160, so would that be $1,340 per month, but you continue to make the $1,500 a month payment that you have been used to making. So basically another way to say that is your payments are lowered, but you're still going to apply this extra amount that you don't have to, you're still going to apply it to your loan every month. What does that do for you? So that's kind of a cool little trick, because where typically people are set up with their budget, they're used to making that monthly payment. So if they can lower their monthly payment but continue to make the old monthly payment, you can do some damage to your loan. And here's what I mean. If you, this monthly difference, if you continue to apply that to your new mortgage at 3%, you will save a lot of money, because you're adding that $160 toward the principal each month. So interest here, you can compare this block to this one or this one. So your interest here is $99,000. So you can see you're even saving, what, 27 grand there, just by adding the $160 a month. It affects the total repaid. And here's the cool thing is your years of payments, we're not paying for 30 years anymore. Even at a new loan, if you reset the clock and you have a 30-year loan, if you add this monthly difference, if you keep making your original payments of $1,500 a month or whatever they are, you will knock off, what is that? It's almost 6 years of mortgage payments. So that's the other cool thing about this strategy is here, even though you're only a little over 2 years into it in this scenario, but you can actually, by leaving your monthly payments the same and just refinancing to a lower interest rate, you can even save time even if you've already, even if you've already paid for 2 years on your 30-year loan, you can save even more than that if you apply this strategy. And then this is a way you can save even more money, but we'll do that in another video. So anyways, I just wanted to share that with you. If you want to go through your numbers and see what your scenario is, you can I'll put a link somewhere. You can click to book an appointment with me and we can go through this together. I'm going to try to make this available if people just want to buy this calculator, so you can test as many different scenarios as you want and kind of learn a little bit more about how this works. But that's this page. So once again, we can just enter your info here. We can compare, with the new loan. And this would be, we can also look in these other tabs and see, this would be this is our loan B. So this is our new scenario. And this one goes through and it tells us if we apply that monthly extra, it automatically grabs that data from the previous page and populates that here. And this will tell you exactly what your amortization schedule is. And I'd be happy to go through and explain how this works. And hopefully here, this is what we like to see, all these blank rows here. This is all payments that normally we would be making, but we're not, because we refinance. We've got that extra $160 a month, but we're still going to apply it to the loan, so we save tons of money. Anyways, that is everything. Hope that helps. Hope that's at least a good idea to kind of get your wheels turning. And once again, if you want to go over it, be happy to talk with you. Take care.